Savvy Money Show with me, host Sean. If you find any of today's entertainment helpful, don't forget to smash the lovely like button, helps with the YouTube algorithm and getting the video out to more people. If you haven't subscribed already, don't forget to hit the subscribe button, bell notification, you'll be notified when a new video gets uploaded. If you're looking for a free trading platform which will trade your stocks and shares, don't forget to check out links in the description below. You'll get a free share worth up to £200 for signing up and depositing a small amount. Free trade only requires a £1 deposit to qualify, but £2 to trade, and the others require £100 or dollars depending on which app you use. Let's go. And yes, we're talking American tankers. Sorry. I bought in at 4.15. I said I would buy at 4 to 4.15, and I did. So I also said one of the directors bought at 4.12. Now we want to have a look at the market. The funny thing is, with the likes of DHT and Euronav, the spot rates are at a price, have dropped to a price where they can still make a profit. But the problem is, they, apart from the long-term contracts they have with the Suezmax, which is half the size of the VLCCs, they have taken off all the oil from the Suezmax on the short-term contracts to refine and to use. Now, what that means is that the spot rates have come down to 8,000. And if you remember from the CEO's interview with Jim Cramer a few months ago, he says it costs $8,000 a day to operate. So they are effectively leasing it out at operating margin. However, people remain more bullish on NAT than they do on Euronav DHT. And the reason why is because they think the VLCCs are going to be the next ones to be emptied. Now, back in March, April time, we spoke how DHT had 27 VLCCs, and at that time 23 of them were still free, only 4 of them were on long-term contracts. Now, hopefully they had the foresight to put some of them on full-time, long-term contracts. Now, this is the tanker market index. You can see where it's tanked, pardon the pun, and you can see how compared to 2018, 2019, how much it went up because of Contango. Now, people are panicking when really this spike between March to May has set the companies up for the year. Even if they were short-term contracts. If they're long-term contracts, even better. Now, basically I'm waiting for an earnings call from each one to tell me how many was on long-term contracts, how many was on short-term contracts. At the moment I'm making a profit on my NAT, but not enough. I said how I think it would be a long-term hold. That's why we went into DHT, Euronav and Frontline. Frontline I've come out of when I made enough profit and they announced that they were going to issue more shares, not just a few more shares, because I could handle that dilution, but when they're going to issue 50% of the amount they have on the market, there's a heavy dilution. Now, thing is, NAT and DHT, in my opinion, well, DHT I think is undervalued at the moment. NAT I think is cheap, but when you consider the spot rates, I understand why it's that cheap. I picked some up, not a lot, but I picked some up thinking it's going to be long term. They could weather this storm because according to the trend lines and historical data, freight rates should be going up soon. But that's because in the fall, in the winter, that's when spot rates will traditionally go up. Not only that, but we're having more outbreaks, not just in China, but in America as well. And the UK is about to open up more. They are telling people who are shielding, you've got to go back to work, you've got to go back to school. So I think there will be more outbreaks there as well. What happens when there's more outbreaks? People stay at home. Now, even if the government doesn't tell them to, they will stay home. And that causes another contango. But with NAT, it will be a short-term gamble, purely because they will be operating at cost. And I know some of the companies, some of the oil companies who have been contracting them, have been asking them to, instead of staying in one place, to transport it from one place to another, just so they use up some oil, and they're paying them to do that. And then when people are looking at the charts, they're seeing like that little bit more oil is getting used, and they're turning, those people who are on the fence are turning from bearish to bullish. Now, and also it looks better because you haven't got so many tankers off the coast. You don't have those pictures of the tankers at the coast. Now, I'm in two minds what to do about NAT. Do I hold for a long term? I've said before how it's cheaper for me to hold this stock as an insurance against the oil crisis and buy a stock of an oil stock on the cheap. So I have an oil stock, oil prices go up, the oil stock goes up. If the oil stock goes down, my oil tanker stocks go up. The oil stocks are down by more than $4. So it's like hedging my bet. So, but then DHT is just $5 and change, so I may jump into that. Anyway, don't forget to hit like and comment in the box below with your thoughts, even if you disagree with me, and I'll see you in the next video. Goodbye.